Jason Simpkins has a new presentation called the AI Victory Plan, where he claims there will be another unforgettable market frenzy that could ignite gains of 3,000% or more. And as a result, President Trump will set into motion a $5.2 trillion wave of cash, and the time to act is now. I reveal all the stocks Jason is pitching in this video, so you don't have to pay Jason $2,999 for the stocks. Keep in mind, no paid or proprietary information is given away in this video. It's all guesswork based on clues from Simpkins' publicly available sales presentation. Before we do anything, let's look at Jason Simpkins' past stock picks to see how good he is. In April 2021, Jason recommended VSBLTY and claimed it would explode as a result of COVID. It did triple quickly afterward, but then quickly crashed. It's hard to sell at the right time, but if you did, you could have profited nicely. In June 2022, Simpkins recommended Copen and the stock has been up and down, but overall it's down. In September 2024, Simpkins recommended Kratos for their AI fighter jet, and the stock has performed well so far. It's up while many other stocks have been down during the same time period. There are a lot of stocks to uncover, so we're just going to jump right in. Here's what Jason says about the first stock. He calls it NVIDIA's silent partner, the sub-$5 supercomputer stock powering the AI revolution. Here's the description Jason gives for this company. With military-grade AI supercomputers that will dominate combat for the next 100 years, because you couldn't even think about bringing NVIDIA's AI to the battlefield without the patented liquid immersion cooling system this firm employs. And without NVIDIA, there would be no AI victory plan at all. Not now, not ever. Not without this patented liquid immersion cooling process. That's why this small stock has so much potential right now. They make the smallest supercomputer in the world. Now it's sitting in the catbird seat of one of the fastest growing markets in the world, edge computing. And the air orders coming in so fast, the company has a $1 billion plus backlog. This is One Stop Systems and the ticker is OSS. One Stop Systems designs and manufactures rugged, high-performance computing systems tailored for edge computing applications. Their solutions are particularly suited for environments where traditional data center infrastructure is impractical, such as in defense, autonomous vehicles, aerospace, and industrial sectors. One Stop Systems employs advanced cooling technologies to support its high-performance computing systems in rugged edge environments. I personally think this stock deserves a spot on the watch list, but is not a buy at the moment. And here's why. First is earnings misses are piling up. OSS recently reported a Q4 2024 EPS of minus 0.12, missing analyst estimates by 0.08, and revenue also fell short of expectations. This consistent underperformance signals operational hiccups that need fixing before you commit your hard-earned cash. Second is profit margins, are razor thin. With gross profit margins sitting at a shaky 14.11%, OSS is struggling to turn sales into meaningful profits. Until they boost those margins through their high-margin AI pivot, it's a risky bet for investors. Third is government delays are holding back growth. OSS is facing order fulfillment issues due to government budget delays, which could stall revenue growth in the short term. This uncertainty makes it tough to trust their near-term projections. Fourth is market volatility as a wild card. The broader market's been a roller coaster, with tariff fears and economic uncertainty shaking small caps like OSS. Until the macro environment stabilizes, OSS's stock could stay under pressure. Fifth is big ideas, tiny contracts. They talk up their presence in AI and defense markets, but their deals so far have been small and inconsistent, limiting immediate upside. I'm going to reveal the rest of the stocks in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off Alpha Picks. So go ahead and click that link and take advantage of this amazing deal. Here's what Jason says about the second stock. He calls it the AI Manhattan Project, protecting America from hypersonic attack. He goes on to say, in this dossier, you'll receive all of my latest research on the small firm whose revolutionary new AI stops hypersonic missiles dead in their tracks. Because make no mistake, the US military isn't sitting around waiting for an assassin's mace hypersonic missile strike to unfold. Behind the scenes, the Pentagon has been working with DARPA, our top secret weapons maker, hunting for a way to obliterate hypersonic missiles. And one of them has cracked the code. It's a small, under-the-radar firm most people don't know about because much of what it does is top secret by every definition. Now the Pentagon has gone all in, awarding this firm big contracts as part of an $11 billion effort to neutralize these new threats. I'm almost certain this is Leidos, which many other stock pickers have recommended for its hypersonic capabilities and DARPA connections. Leidos is a prominent U.S. defense technology company specializing in advanced systems for national security. In the hypersonics domain, Leidos is at the forefront of developing cutting-edge technologies that enable vehicles to travel at speeds exceeding Mach 5. I think Leidos is a buy, and here's why. First is massive backlog equals future cash flow bonanza. Leidos is sitting on a whopping $43.6 billion backlog as of January 2025, up from $37 billion last year, ensuring steady revenue streams from defense and government contracts for years to come. Second is earnings growth that crushes the competition. With a projected EPS growth of 29.5% this year, far outpacing the industry's 9.5%, Leidos is delivering double-digit profit surges that make it a growth investor's dream. Third is undervalued gem with a dirt-cheap PE. Trading at a forward PE of just 12.37, Leidos offers incredible value compared to its peers, making it a no-brainer for value investors hunting for market-beating returns. Fourth is consistent contract wins fuel momentum. Leidos keeps securing high-value contracts like a $390 million NSA deal and UK Ministry of Defense projects, driving revenue and proving its dominance in cybersecurity and defense tech. Fifth is dividend growth for passive income lovers. Leidos has consistently raised its dividend, currently yielding around 1.5% with a quarterly payout of 38 cents per share, offering investors a reliable and growing income stream alongside capital appreciation. Here's how Simpkins titles the third stock: Dogfight Domination, the AI pilot that's changing aviation forever. Here's how Simpkins describes it. In a historic first, this firm's AI-powered Top Gun has shaken the Pentagon to its core. Flying without a human pilot, it completely obliterated a top naval ace 5-0 in a head-to-head dogfight, coming away without a single scratch. That has set into motion one of the biggest transformations the US military has ever seen. Pilotless aircraft with superhuman reflexes that never tire and require zero training. Now hundreds of billions in new Pentagon contracts are about to send this tiny defense stock flying. Because the technology developed by this small firm will revolutionize aviation forever, the same way jet engines did, but with an impact 100x bigger. As this program progresses, I would be shocked if this company didn't show investors at least a 5x return in the months that follow. And likely a whole lot more. I'm talking gains as high as 20 times your money, for those willing to hold longer term. This company is Kratos Defense, and this is stock that Simpkins has pitched in the past as well. Kratos Defense and Security Solutions is a US-based technology company that specializes in defense, national security, and commercial solutions. It focuses on unmanned systems, satellite communications, missile defense, cybersecurity, and directed energy. One of Kratos' most well-known projects is the XQ-58A Valkyrie, an experimental unmanned combat aerial vehicle UCAV, developed in partnership with the U.S. Air Force Research Laboratory under the Low-Cost Attritable Aircraft Technology Program. Kratos has been a good stock and one I recommended in the past, but I don't recommend right now, and here's why. First is sky-high valuation. Kratos' stock is trading at a lofty price-to-earnings ratio, making it overvalued compared to peers. With limited near-term catalysts, this premium could lead to a pullback. Second is slow revenue growth. While Kratos has exciting drone and defense contracts, its revenue growth has been inconsistent. Recent quarters show sluggish top-line expansion, raising concerns about scalability. Third is profit margins, thinner than a razor blade. Kratos struggles with low profit margins due to high R&D costs and competitive pressures. This makes it tough to generate meaningful earnings, limiting upside for investors. Fourth is big contracts, bigger risks. Kratos relies heavily on government contracts, which are subject to budget cuts and delays. Any hiccups in funding or execution could tank the stock. Fifth is market hype outpacing fundamentals. The stock's recent rally seems driven by defense sector buzz rather than solid financials. When the hype fades, Kratos could face a reality check. Here's how Simpkins describes the last stock. He titles it, The Kamikaze Drone Revolution, Investing in AI-Powered Loitering Munitions. Here's how Simpkins describes this company, where you'll learn the details behind an AI-powered kamikaze drone that first cut its teeth in Afghanistan and Iraq before being used in Ukraine to great effect. Because whatever these drones slam into, they absolutely annihilate. Now, the firm that makes them basically has a license to print new money. In fact, according to my sources, over $1 billion in new orders for these things has just come in from the Army alone, with billions more soon to follow. Now, this firm's revenues are set to skyrocket, sending shares potentially 2 or 3 times higher from here. This is AeroVironment, and the ticker is AVAV. AeroVironment is a US-based defense contractor specializing in unmanned aircraft systems and tactical missile systems. The company is known for producing small portable drones for reconnaissance and surveillance used widely by the US military and its allies. AeroVironment has positioned itself as a leader in loitering munitions, sometimes referred to as kamikaze drones, which are designed to hover over a target area before striking. I don't think this stock is a buy, and here's why. First is sky-high valuation, priced for perfection. AeroVironment's price-to-earnings ratio is a lofty 83.5, way above its defense contractor peers, meaning you're paying a premium for growth that might not materialize if they hit any turbulence. Second is profitability woes, margins, taking a dive. The company's operating margin dropped 5.7% over 5 years, and free cash flow margin is a weak 5.6%, signaling it's struggling to keep costs down and generate solid cash. Third is geopolitical headwinds. Ukraine uncertainty looms. With the Trump administration scaling back Ukraine aid, AeroVironment's sales tied to the region could take a hit, as they've already admitted it's impacting their guidance. Fourth is disappointing earnings, missing the mark. Their latest Q3 FY 2025 earnings tanked, with revenue down 10.2% year over year and a 22.4% stock drop after missing Wall Street's expectations on both top and bottom lines. Fifth is capital intensity. Growth could get pricey. A declining return on invested capital and a trend toward higher capital needs suggest AeroVironment's business model might be getting more expensive, limiting profitable growth. And make sure to click the link in the description to check out Alpha Picks and get $50 off this amazing service.